Okay, so this is the second session of today. Please, if you have not gone through the previous session, we had one session in the morning hours, right? So this is we're trying to meet up with our 30 days YouTube mentorship. I told you guys that we had network issues, right, which made us, to have a break in the consistent pattern we've been having, right? So there's nothing I could do about that. That was a situation that was out of my control, right? So I could not do anything about the situation of that, right? So that is by the way, right? So um, let's just have a continuation of what we have been doing so far. All right. So let's talk about asset correlation, right? I told you guys this in the morning session that we'll be talking about SMT divergence. So I want to call asset correlation. Asset correlation is a very interesting topic, right? It helps you to know what to expect in the market, right? So asset correlation. Now, when we talk about asset correlation, we are referring to the movement or the relationship with one particular pair or instrument with the other, right? So one particular instrument with the other, that's what we're referring to when we say, um, when we refer to as, when we refer to, um, when we refer to asset correlation, right? Referring to the movement of one instrument relative to the other one, right? So that's what we basically mean when we say asset correlation. All right, so that is basically what we mean when we say asset correlation. Um, for you to actually appreciate asset correlation, you have to know that we have various kinds of correlation, right? You have what we call the positive and the negative, right? So we have positive. So if an asset is either positive, right, either is positively correlating, and um, what's this simply means they move in the same direction. And what's it mean they move relatively in the same direction. And then we have what's called negative. Negative correlating asset that what that move in the opposite direction, right? Opposite direction. So they don't. That means if one is going up, one is going down, and the other is going down, the one is going up, right? Also be a negative correlation. And then we have one that are neither. So these ones are not. They don't have any relationship, right? We have pairs that don't have any relationship, right? They're not related to each other. So these are the three classes of correlation, right? So now we're on even under the positive, we have what we call strongly correlated and weakly correlated, right? So you have ones that are very strong. That means this happens most of the time, right? The other ones are also very strongly negatively correlating, right? So they have some that are weak. So for this class, I won't talk about the strong and weak ones because that is something that will take me a lot of time, right? I'll just touch the surface, what is what's positive and negative. I think my private students, I've taught them the one that is strong, the one that is weak, right? So I won't talk about that again, right? So maybe if you want to learn more about this strong and weak, you can always sign up for the paid class. The recording is there. You can also have access to it if you wish. I'm not here to market anything. If you wish to join our paid mentorship, the difference between YouTube and paid mentorship is that in a paid group, you are actually on that tutelage. Right? For instance, now if you have a question, something is not clear, you need clarification, you can always reach out to me. Right? Unlike this free YouTube class, right? Most times I don't even go. Most times I don't really know how to answer questions because if you ask me a question now, I don't know if I'm supposed to drop a chat in the YouTube channel or if I'm supposed to make a special video for you or any of that. So, but if you're in a paid group, you have access to our community where you can ask questions. I can see and answer directly. But when it comes to YouTube, I'm not able to do that, right? Maybe if you have a question, maybe need clarification, it's always best that you're in a paid group so that I can have, we have live classes, I think on Sunday. So when you have a question, I can always bring it up in our live class and then I answer you directly, right? Explain with illustration. That is just the difference between paid and the, in terms of knowledge, right? I don't really feel that in terms of knowledge, I don't really feel that the knowledge is different, right? Because I'm not going to be teaching you rubbish and then teaching them something different. No, I'm not that kind of person, right? What I'm teaching you is similar to what I teach them, but just that sometimes I go over the line, like I go further, like I go deeper to explain, and then they can always ask questions where they're not clear, and they're also in the part of the community where you can interact with other traders, right? So I feel that being a community where you can interact with other traders is also a plus. Being able to ask questions, someone can direct you, do this, do that. You have a confusion. The person can say, okay, do it this way, do it that way. That is also one of the perks of being in the paid mentorship, right? Those kind of things, being able to ask questions. So this thing is not clear. Can you put it through to me? You can go through our recordings. Our recordings are available since 2021 to date. So I'm not going to kind of give you a recording if you're not in a paid group. So you can have access to a recording for the past 3 years, right? Everything is there, right? So if you want to just send me a DM, right? So we are going to actually go to our original price by the end of this mentorship. So if you want to join us, you're still going to join us at the old price, which is what, just send me a DM if you want to join the pay group. Right? It's not by force. I'm not forcing you to join. You can always stick with the YouTube channel. But I tell you that if you're on the YouTube channel, you are actually missing some things. You're actually missing what? Guidance, being able to ask questions and get answers, those kind of stuff. That's what I feel that you're missing, right? So it's important that you get direct mentorship from a mentor, not just watching videos. All right. So now let's talk about the positive correlation aspect. Now, on the positive angle, we have pairs like the ones that are positive. Let's talk about the positive ones now. For the positive ones, that is the market that move in the same direction. We talk about US 30, NASDAQ, and SP 500. So these three are correlating, right? They move in the same direction. Then we have what? Euro USD and GBP USD, right? They move in the same direction. They also have, let's take out this space. These are the pairs that are correlating. All right, also have another one. We have AUD USD and NZD USD. We also have Euro JPY. So I also have Euro JPY and GBP JPY. So these are pairs that correlate. All right, they move in the same direction. Right, but the chart are not the same, but they just move in the same direction. They're positive, right? So this is one I can remember for now. Then for negative, we should know them already. We have yes, we have the DXY and the USD. So the negative correlating pairs. I have they have DXY and GPUSD. I think those are the two I can remember that's negative correlate. All right, so but most times it is DXY and Euro USD. Right, so DXY refers to dollar index. So DXY refers to dollar index, right? Dollar index is also referred to as USD. And then for here we also have yen basket and GBP JPY. So those are the pairs I feel that are negative correlating. That means they move in opposite direction. They will have neither are other pairs that don't have any relationship with each other. Maybe USDF and gold, pairs like maybe USD ZAR and GBP AUD. Those pairs don't have any correlation to each other. Right. So this is what we mean by positive and negative. So I won't be showing my chart and then showing you each of them one by one. Right. So that's your duty. I've listed them out. So you have to go to your charts and confirm if they are actually negatively or positively correlating. That's your part of this mentorship, right? Just go through your chart and check if they are positive or negative, right? Just compare it. And then if there's anyone I did not mention, you can also type it out, right? Right. Right. So that is it. So now let's talk about the now when an asset is not correlating. Now there are rare situations, right? There are rare. Let's not say rare. There are special cases. Let's not say it's rare. There are special cases where these correlating assets fail to correlate, the positive ones. So when a positive currency fails to correlate, right? So when a positive correlating asset fails to correlate, it leads to what we call what? A divergence, right? A divergence. So when a special case happen and a positive correlating asset, they crack, right? It fails. The positive correlation starts to fail. We call it a negative correlating asset, right? When the positive assets begin to fail in their correlation, that means they are not doing that thing that you like to see, right? That thing that they like to see, they're not doing it, right? It refers as what? Negatively correlating, right? Negative correlating, that's what we mean when they fail to correlate, right? So, sorry, not negative, you call it the divergence. I don't know why I'm just saying that. So when they fail to correlate, they become what? Negative, not really negative, they become divergence. That means there's a crack, something is off. It's just like now, maybe um let's say that at your workplace, right? Maybe you work somewhere and every day they give you guys a bottle of, let's say, a particular brand of water. Maybe let's say Seaway water, right? Every day for the past 3 years, whenever you come to work, they've been giving you Seaway water. That is the regular thing. But then one day you come to work and then you notice that they are giving you a different brand. Let's say maybe um Aquafina or Nestle. So Nestle is popular. So they now change from giving you the usual seaway water to giving you what Nestle water. So that situation, what we call a divergence. That means it has diverged from the regular occurrence, right? So that is what we mean by um, divergence. Now we have two kinds of divergence. We have what we call the bullish and the bearish. So the bullish example is when um, one pair, right, makes a low and the second pair fails to make a low. So those will be referred to as what? A bullish one. So the other correlating pair fails to make a low, right? The first pair above here makes a low, and maybe it could be US 30 and NASDAQ, right? We see a low form on, maybe one of them. It could be EURUSD and GBP, right? We see a low form here, and then this one fails to make a low. That means the market might be giving what? An indication that this guy wants to go bullish. That means this guy is getting this guy is not this guy is strong, right? There's something that is making price not to go down. That means this low is there are buy orders there that are not allowing price to go below. That means you can look for buy opportunities in this trade. That means if you see market maybe give you a confirmation by breaking structure, they can look out for what buys, right? So whenever you see these kind of situations where the positive asset is making a low and one is not making a low, that means there's a reason the market might be good. Now, you don't just trade. Now, this is the mistake I made as a trader, right? When I learned about the divergence, I started to go and trade it anywhere I see the divergence, I will just buy. But that is not the case. There are times in which, let me just put the balance here. There are times in which this can happen, but it doesn't mean it's divergent. That means there are times in which USD can be lagging. That means it's dragging behind. That means sometimes you can see British pounds make a low while USD is dragging. That means it's slow. It's not really moving. Maybe due to a fundamental event. And maybe let's assume that maybe there was a news on USD, something like let's say interest rates, and GPUSD does not have any news. So that news could lead to one pair, lagging behind. It's not going as it's supposed to go, but eventually it will still make a low. So you have to be mindful that there are times in which it's called just simply a lag. So whenever you're taking divergences, you must always have what? A higher time frame reason. That means maybe an order block or an imbalance, right? You should have a higher time frame reason why this should hold. There should be a higher time frame reason why it should hold. Don't just take it that just blindly. Maybe there's a reason from the high time frame that the market should do this, right? Don't just buy and sell just because you saw divergence, right? So that is it. So for a bearish example, just the opposite. One pair makes a high, and the other pair fails to make a high, right? One pair makes a high, and the other fails to make a high. So all right. So the other pair fails to make a high, right? So oh my god. So the other pair fails to make a high. This one makes a high. Why the next pair fails to make a high? So that's what I mean. So that's what I mean. So this one made a high. Why this one failed to make a high? So we call this what? A bearish divergence, right? Bearish divergence, right? So in this case, you look for sells on the pair that made fail. This way you focus on this one that failed to make a high. Maybe if you get the confirmation for a sell, and of course, there has to be what? A higher time a reason why you should do that. But maybe markets took a liquidity or something of that sort. There should be a reason why price should do that. But don't just take it blindly. Right? This is the two cases, or these are the two cases where we have divergence, right? In the bullish case, when the market fails to make a high, and then the bearish case. So the bullish case when the market fails to make a low, and the bearish case when the market fails to make a high. Right? Those are the two cases where we can say, okay, the market is diverging, right? Um, all right. So these are the two cases, right? Yeah, that is it. So remember, you focus on the pair that failed to make a low. Although you can still buy this one, but it's best if you buy the one that failed to make a low because that is where the weakness is coming from, right? Buy the weaker pair, focus on the weaker pair, and then you get it right. So let's do a few examples. This teaching is very deep than this, right? I'm not able to cover everything because of this is a 30 days class because if I spend my whole time teaching this, I might not do something else, right? So you just have to study this on your own and then get a better hang of it. Remember, I told you guys that you must have a higher time frame reason. Don't go and take divergences because it's such as doing creating high creating a higher low. Don't do that, right? It could be a lag. Like it could be a lag. A lag is when one market is moving faster than another. It doesn't mean it's divergent, right? So it's difference between divergence and a lag, right? So let us just look at charts now. Right, this is a very clear example of a divergence here. Look at it. So if you look at this area of the market from here, right, we had this bullish order block. Remember this bullish order block we had earlier yesterday or in the morning session? Look at this bullish order block here, right? And then notice that there was a low form there, right? Meanwhile, oh my God, I've done something. Why is what happened? What happened? What happened? What happened? What happened? What happened? What just happened? All right, so let me just do that again. Sorry. Sometimes this thing acts up. Just wondering what happened there. All right. So like I was saying, you can notice that there was a low form there, right? You look at between here and there. But if you look very carefully at the one below, you can see there was no low form there. So you can see that there was also what a divergence here. So you can see that. So that would have been it. So if you are going by that, you would have bought the markets, there was a kind of bullish break. Markets came back, maybe you have bought at the retest, right? So that is just it. Sometimes if you're very aggressive, you can just buy directly, just click your buy directly, right? So you can still do that if you wish. Let me see something. Let me use black bull. Let me use you give me US 30 on another pair. Because this market is starting to piss me off. Let's use FXCM. All right, this is FSCM because I think FSCM will have previous charts. All right, this is FSCM, the broker. All right, so thank you. That's what I'm looking for. So you can see there, the low was formed, but in this chart lower, there was no low formed, right? It did not make a new low, right? It just made an equal low or something of that sort. You can see how the market went deep down. This one did not do that. So that was the reason. That was a kind of indication that market wants to go bullish. Right? I can see that this market actually went bullish. Right. So normally you should focus on this one, but from what I can see here, what I can see at this point here, there's no real PYA because in this case we had another block here. Well, in this case there was no other block, right? So I think that this one would have been better to trade because you had a bullish divergence supporting your trade idea. All right. So let us quickly look at one. Maybe see if we see. Let's look at for one or maybe Euro USD and GBP USD. Right. Let's look for one there. Let's look for one. If we see one on Euro USD and GBP USD. So I'm comparing this with GBP USD. GBP USD. Remember, I'm just giving you guys an example. Right. Of course, you have to look at the higher time frame to confirm this. Right. So let's look at GBP USD and Euro USD. So let's quickly look at that one. Yeah, that's it. Let's look at this one. Remember, I told you guys that you must be a higher time frame this. And of course, if you have not subscribed to the channel, do want to subscribe to the channel if you haven't, so you can have that. Now, look at a very good example here. I can see it. Can you see it? Can you see it already? Of course, you can. So look at this here. You can see how USD found it very easy to make a high, but can you see that there was no high formed on GPUSD, which is the one below? You can see the market dropped after that. So this would have been the one to focus on GPUSD, right? So I see how the high was formed, but there was no high formed there, right? There was no high formed, right? There was no high formed. You can see how at this point here, even happened somewhere around there. You can see how this guy was going bullish, but this guy was not able to go above this previous high. That means something happened there that led to the market dropping. So this was where the sell orders got introduced. Something was going on here. I was making price not to go in the same direction. So one was making highs, one was not making highs. So that was what led to that drop. All right. So this is how these things happen. It happens most times, right? It happens a lot. I look at another one here, like a very good example. This is a bullish example here. You can see how this guy dropped massively. But can you notice that this Euro USD or GPS, sorry, did not drop? Right? You can see that there was no drop here. No drop at all. Can you see it? This drop happened. Meanwhile, there was no drop here. And what happened? There was a bullish market. The market came out, tapped into solar block. Even though there was a heavy drop here, there was no drop here. The market would do what he bought. So that's what I mean by divergence. So of course, this something happened on a higher time frame led to this. Don't just remember I said don't take my word out of context. Find the high time frame reason for the divergence to hold before you take your trade on divergence ideas. So you buy the one that is weak, which is one that fit to make a low. But in rare cases where if there is no specific, other block or something to take a trade of, they can focus on this other one instead. But most times it's always good to go the one that is weak because it is weak because it can't make a low, right? So this is how I'll wrap up today's class. We have had two sessions today, two amazing sessions. So if you have learned something, just drop value in the comment section. Do want to like this video, share with your friends, and I wish you the best of the trading day. Do what watch this video 2 times, back test, study, and have a wonderful day.